How's it going, guys? Mauricio again with you guys on today's session. Now, I'm going to go ahead and make trading simple for you guys. Okay, so when it comes to trading, understand that the market can adapt to you, but also you can adapt to it. The question is, what do you want to do? Do you want to adapt to it, or does it want to adapt to you, right? So I understand that many people have a 9 to 5. I understand that there's graveyards, time to work. I know people wake up in the morning and there's like late shifts, morning shifts, mid shifts, so on and so on. And it gets kind of hard, right? So when it comes to that, one thing that I've gone ahead and done on my end, just so that way you guys can see what it is that I like to do all the time, is to separate my days, right? Master one pair, separate the days. When you master one pair by separating the days, for example, I separate every single day at the 00 time because I know that that is the start of the next day. And I base myself off of New York time frame because that is one of the most volatile sessions, as well as the London session. So either London or New York sessions are the ones that you would want to separate these times, so that way you know what's happening inside the market. Now, real quick, when it comes to this type of a setup, I like to trade major pairs on New York session. I like to trade GBP pairs on London session, and I like to trade exotics on a session, or going into London session, or going in or getting out of New York session, right? So you got to be able to understand what pair you are going to be trading. Now, when it comes to this scenario, since I am trading, that's my group right there. When it comes to trading, right, you want to be able to understand, hey, I'm going to stick at this rule and this rule only, because most people fail due to the fact that they always want to trade every single day, right? But if you are disciplined enough to only trade one pair and one pair only and master it, then once you master that, go to the next pair. Awesome, you're ready ahead of the curve. So for example, I'm gonna show you guys a couple of these trades that we're taking out this week. So far, my record, a 231 to 1 risk reward. I am very, very happy for that. Last time it was a 51 to 1 risk reward on USD CAD. And I'm gonna go show you guys the breakdown of this, okay? And I'm more than likely gonna break it down more simpler on the next video. So the next video I post to be breaking down the 231 to 1 risk reward, why I took this trade, and why I decided to continue on trading all the way down. And that's gonna be on the next video. But for now, I'm gonna go ahead and explain, some of these trades that I went ahead and did. So one of the things that I always like to see, I always like to see the RSI, right? I always want to go ahead and see the RSI, because the RSI is going to help us identify what is potentially happening when it comes to divergence standpoint. Now, as you can see, I can see market coming down, market going up, and within those areas, those are the areas that I like to take in consideration when it comes to a potential movement. Now, when I see divergence, then I look for either points of interest, which are points that I go ahead and put my attention to. When I'm able to identify these points of interest, I'm able to put my attention to it once the market comes back and retraces into it. Now, all these trades are fairly simple. You can see market coming down. We have our point of interest, market retracement, and comes to a 78.6 retracement. And then we have our rally to the upside, which led us to a 7 to 1 risk to reward. Now, going up to the next day, you can see I have separated my next day. And look at this. They look exactly the same. These two trades look exactly the same. Same scenario. We look for divergence. We look for a point of interest. Verification liquidity. I'll be talking about verification liquidity later on in the future for these sessions, so you guys can stay tuned. And as you can see, it comes back down to 78.6 Fibonacci retracement, and then rallies up, leads us to a 5 to 1 risk reward, almost a 6 to 1 risk reward for our take profit, because that was our previous high. Now, if I wanted to, I could have took it up a little bit higher and led it to a 9 to 1 risk reward, but again, we don't want to be greedy. This is only one trade we take a day, and we're done, right? Going on to the next trade, which is the one that led me to a 231 to 1 risk reward, or 1 to 231 risk reward. This was a phenomenal trade. I'll break this one down on the next session, which is going to be fairly interesting. You guys will be able to understand why I entered, why this trade specifically, and why I decided to continue moving all the way down. Okay, let me go ahead and mute that chat real quick for you guys. That way you guys do not get disturbed. Okay, so I'll break that one down next session, but I want you guys to see the next day I didn't trade. I was able to swing this one right here. The next day, we're able to see the same scenario. We saw divergence happen in this area on our lower time frames, and then we saw the rally to the upside. You can see the divergence was happening over here, and then happen on the other side. Comes down to 78.6, and then rallies to the upside for our take profit, leading us to a 6 to 1 risk reward. Then we have this right here, which happened on London session. So understand that you can do London or New York; they're both good, right? But if you do other cross pairs, I recommend going before entering London or after getting out of New York. On this scenario, we see divergence, point of interest, verification, liquidity, comes and tests. This one was actually sent out on our live sessions. If you want to go ahead and be part of those live sessions, reach out to me, reach out to my Instagram, or reach out to me via YouTube. My Instagram is going to be this right here. C4X. Okay, so it's mauricio.c4x. You guys can reach out to me right there. And then, ask for more info on how it is that you can be part of those sessions. We do it every single morning, so that way you guys can go ahead and jump on and, make profits off of those. Now, going on over here, we can identify, same scenario, market comes down, we see our divergence, we see our point of interest, rally to the upside, comes down to 78.6, rejects out of 88.6, and then rallies all the way up to our highs, leading us to a 3-to-1 risk reward. This was last trade that we took. This was 2 days ago, and it was a good trade that we took. Actually, no, this was last week's. Now, going on to this week, we have this trade right here. Right, this trade right here was a great trade. We're able to identify the whole rally to the downside, rally to the upside, divergence being identified, and then coming up to our 78.6 Fibonacci retracement, rallying us down to a 3.61 to 1 risk reward. Now, the day of today, we had a potential setup as well. This one right here, I did not take it, but my team did. They went ahead and traded it this day, which was a good setup as well. We're able to identify our verification liquidity coming to downside, which is market shifting direction, and then rallying back up into our levels that we want to go ahead and identify for our entries. Now, when we came up to that level, you can identify that market was reacting within the 78.6 and the 88.6, touching base into our points of interest and also imbalance zones. I'll be talking about imbalance zones later on in the future as well, so stay tuned for those sessions because it will be good for you guys, so that way you guys can learn a little bit more as far as these details. Now, when it comes to this scenario, what would I have done ahead right here? I would have put my stop loss right above over here. This would have been like a 12 pip stop loss. I would have gone ahead and did 12.5 pip stop loss. Sorry, that fly is really bugging me right now. 12.5 pip stop loss, and then our take profit would have been over to lows, which would lead us to 5-to-1 risk reward, which is phenomenal risk reward. From time of entry to time of exit, it would lead you to about a 1 hour and 5 minute time within this trade. So with that said, looking forward to see you guys on the next session. We will be talking about the trade of that 231 to 1 risk reward, meaning I was able to risk 1% to potentially gain 231%, right? I'll show you guys how I went ahead and maintained that trade, how I was able to get that really good entry. And with that said, I'll see you guys in the next one. Thank you for jumping on today's session. You guys have some fun, and go ahead and backtest your trades. Go ahead and put yourself in that situation where you know that you are only going to trade at a certain time and that time only. So with that said, see you guys on the next one. Have a great day.